Welcome to another Prospectus review here on Learn Grow Invest. Today we'll be going through One Great Studio. Their prospectus was released last Friday, so we're going to be going through it as we normally do here. We're going to focus on a few key sections. I'll get to that in a minute. But if it's the first time here, we do reviews like this all the time. Whenever there's an offer on the market, we try to do a deep dive into the prospectus to give you an informed perspective of the company so that you can make an informed investment decision. Now, even though we're not financial advisors, we still have the opportunity to ventilate the offer so that you can have your own discussions and see if whatever offer is available on the market is the best fit for you. So we're going to go through the prospectus. We're going to focus on some key areas at first, and then we'll read from the prospectus. So it's going to be another great review. Before we get started, be sure to share the video. I'll speak a little bit about how we're going to go through the prospectus in a minute and then explain the coverage that we're going to do for the company. But, let's just get started. All right, so before I go any further, I definitely have to say the information reviewed here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell One Great Studio or any other security. All right, so you definitely want to speak to your licensed financial advisor before you make an investment decision. So before I go any further, as is customary for us, I'm going to open with a brief word of prayer. Thank you, Lord, for this day. Thank you for the opportunity to produce wealth. We pray, Lord, that this will be a meaningful session, one that adds value to everyone who watches it. And we pray your continued blessings over this community in Jesus' name. And all right, so what we're going to do in terms of this review, this is one of a three-part series. So we're actually going to be speaking with the CEO of One Great Studio, Javane Brown, on Wednesday of this week. So of course, if you're watching this on a replay, that video may already have been released, but that's coming up this Wednesday on the 16th of August. And then next week, Wednesday, we'll have the opportunity to speak with Javane, with Gina, the CEO, and of course, their lead broker, which is Barita. So we'll have a live Q&A with them next week, which will still be in time before the offer opens on the 28th. So you'll have a whole heap of time to be able to have your questions answered about the company. We do encourage you, even though we're doing this review, for you to take the time and read through all the sections. It's 206 pages in the prospectus, and I tried my very best to read as much of it as I could today. But it does take a little bit of time, and that's why we're doing these reviews, to give you the main points, but also encourage you, if you are interested, to, of course, dig deeper. All right, so our format is going to take the flow of what you see here. We're going to dive into a bit of the company's history, when they got started, how they got to this point, and just give you a little bit of a background about the company. Next, we're going to go into the offer details. How much are they raising? What's the subscription price? What the company might have looked like before the offer, what they look like post-offer, things of that nature. Then we look at the financial highlights. That would be their last 5 years, really from 2018 to 2022. And then we're going to talk about their dividend policy. Now, they have paid dividends so far, even before listing. So we do, expect that trend to continue. They've mentioned their dividend policy in their prospectus. So we'll talk about that. And then we'll talk about how to apply. That I'm hopefully going to do within about 30 minutes. And in the other 30 minutes, I'm going to go through the MD&A of the prospectus in as much detail as we can to kind of discuss some of the things we're seeing about the company, some concerns, some things that we see as positives, and then we'll close it out by sharing our thoughts as to what we believe this company is positioned to do, and then of course we leave you to share your questions for our interview with the CEO and of course other parties of One Great Studio. So let's just dive right into it. Let's start with the company history. So what we have here is that One Great Studio is a digital agency that was founded in Jamaica. We have the two co-founders here. That's Javane Brown and Gina Deliso. They would have founded the story. Quite an interesting story, actually. I won't give it all away here, but they shared a preview of it in the prospectus, and I'm sure we'll ask them to just give us the background when we meet with them next week. But as for the company, it's a digital agency that's fully staffed with some of Jamaica's most talented designers, developers, digital marketers who take pride in consistently delivering great results. And of course, I'm taking all of this information from the prospectus, so you can see everything there as well. So the company started out with Gina and Javane, and they would have since built it out to a 55-member team, which of course includes the company that they would have acquired recently. We'll talk more about that later. So they've grown quite a bit in the last 10 years, and a lot of that growth would have taken place over the last 3 years. So we'll get into that growth and what that looks like for the company and their prospects moving forward. In terms of just a little bit of the backstory here, it says here, Javane worked as a solopreneur for 8 years designing and developing websites. And, what he did from there was, Gina and him got together and they, thought about what it would look like to form this company together. And so they started to pretty much work on that together. And then over time, the company would have progressed. So it says here that they were united in their commitment to excellence and continuous learning, which undoubtedly has endured to this day. This partnership, forged 10 years ago, now leverages design, technology, and strategy to connect the dots across digital assets, some of the best businesses and brands in Jamaica. And they actually go in depth to list some of those clients. So we'll talk about those a little later, but it's listed here. Let me actually locate that. So I'm reading here from the prospectus. I believe it was shared in the CEO letter. So some of their clients include Barita Investments, Jamaica Broilers, Best Dressed Chicken, High Pro, Guardsman Group, Cornerstone United, Dairy Industries, Ministry of Health, and Planning Institute of Jamaica. Of course, those are their Jamaican clients. They do have clients across the region. And again, we'll look at what that landscape looks like for them. In terms of the countries that they're operating in, also in the prospectus, it mentions here they have clients in the Caribbean, North America, Europe, Oceania, Asia, and the growing markets. So they're quite diverse in terms of their reach of clients, which actually bodes well for them. That's something that's definitely a plus. Now, one of the immediate questions that came up here for me was, of course, the exposure to these markets is a good thing, but what really is the penetration within those markets? That would be one of the questions that I would have, because that to me gives the insight as to which market is probably operating the best for them outside Jamaica and which one they would have the opportunities to penetrate further, right? So let's talk about some of their services, and we're gonna go into them in detail a little bit, but this is just a summary here. So they're a full service digital agency that provides a comprehensive range of digital marketing services with primary focus on digital channels such as websites, social media, mobile apps, and search engines. So they're pretty much helping companies with their digital marketing. So if L.E.A.R.N Grow Invest wanted to have a website done, they would provide that service. If we wanted to have a social media campaign or a dedicated social media strategy, they would help with that. If we wanted to create a mobile app for the LGI community, that's something that they would do. And then if we said, well, we want to be able to rank high on search engines for our community members to be able to find us, then they would be able to facilitate that as well. So that gives you an idea, a very, very high level of some of the things that they do, right? So it says here, these agencies offer a broad spectrum of services that include branding, graphic design, UX, web development, e-commerce, SEO, pay-per-click, social media marketing, content marketing, email marketing, and analytics. And if you don't know what these mean, if you want me to explain some of these topics, just let me know in the comments. I can probably give you some more context, but I'm going to take for granted that some of these are a little bit easy to understand for you. But if you would like me to explain any, just let me know in the chat and I'll do that, right? So being digital first for them means prioritizing digital channels above traditional channels. And we do know that this is a positive for them in terms of where they're headed. Full service digital first agencies strive to support all digital marketing needs and aim to provide a holistic approach to their clients' online presence. By offering a wide range of services, full service digital first agencies work closely with clients to develop digital strategies and provide solutions that help brand awareness, improve customer engagement, and drive revenue growth. All that means in short is that they work to be their customers' partner. So they try to get companies on somewhat, I guess, of a contract or a retainer basis, and they work with them to develop their strategy over time. It's not going to be likely a short-term engagement. They did mention the number of customers that they have. I believe it stated 117 customers in 2022 with an average spend of over 2 million as at 2022, right? So that's a good thing to see. And they would have grown that from 42 customers in 2018. So their customer base is growing. Now, of course, the concerns that you would have there is well, they focus on, and let me actually switch views a little bit here. So they do mention that they focus a little bit on the higher side of the market, meaning they're not necessarily looking to get clients that are maybe from the small business segment, is my understanding of what I read. So it's customers that are likely going to want to commit long term. They're customers who are going to want a range of services, and they would be able to benefit from knowing that we have these contracts with these clients. With contracts with these clients, the revenues is somewhat guaranteed, and what they try to do now is upsell and cross-sell within those clients so that they can expand their revenues, right? Because from the client side, if I'm spending 2 million with them, I may be thinking in my head that I want that budget to stay the same. But then if they come back to the table and say, well, customer, we were able to do your website before, but now we can manage your social media campaign. That 2 million that I'm spending in my head, I'll say, well, I had a social media marketing budget as well. That's $500,000. Can you do it for 2.5 million? They may say yes. So that's one way in which maybe their average spend per customer will grow. It does mention in the prospectus that average spend grew from about 630,000 in 2018 to over 2 million, right? So that's like paints a picture that what they're trying to do is provide as many services as possible to one client. So they're not necessarily going for volume. They're going for depth within the account and to try and get as much of that customer's marketing spend as possible. That's my understanding, of course, from what I've seen so far. What you have here on the screen is their progression over the years in terms of focus on services. They do quite a wide range of services. I'm actually interested to find out, and this is one of the questions that I have for Javane when I speak to him on Wednesday, is how do you manage, let's say you have, so it mentions here 117 clients. I'm going to assume that this is going to be growing over time. They have a team of 55 persons now. Let's say their customer base were to double, how do you manage that workload? How do you engage each client? I'm sure a lot of that stuff is probably internal processes and IP that is going to be unlikely to be shared. But it's just curious to me to find out how you manage that breadth of customers and what sort of strategies they've used. I'll ask a question, very unlikely that I'll get the response, of course. All right, but we'll see. All right, so these are some of the services that they offer. Now I'm going to go through these very quickly because, again, I'm going to assume that some of these things at the very basic level you will understand. If you don't know all the terms, that's okay. It's just really for you to just understand the space in which they're operating, right? So first here it says web. So they build high-performing websites that support and transform brands and businesses. Their sites are designed and developed for simplicity, speed, stability, etc. The interesting thing here is that they were the one to develop the Barita Boss platform, which is what you would use to apply for the IPO. So you could essentially see their working action. And it says here web design and development, e-commerce, website management and ongoing support, security, maintenance and management, and secure website hosting. So again, I'm going to use the example of LGI. LGI says we want to have, learngrowinvestclub.com. So they would provide the hosting for that website. They would provide us with security, maintenance and management services. So if that website needs to be patched, if it needs to be updated, so let's say every now and again the information gets outdated, they probably manage that. If we have a store to sell our merch, say I'm wearing a Learn Grow Invest t-shirt here, if we wanted to have a store to sell merch, they would help us set that up through Shopify and WooCommerce. And so the overall end-to-end service of developing that website is what they would be doing in that case. All right, next it says here search engine optimization. Again, this is just everything involved in getting that site ranked as high as possible in Google and other search engines, of course, and everything that goes along with that. So this strategy, I figure, is a part of the core business of the company High Voltage that they acquired. So we'll talk about them a little bit more. But this core service comes primarily from that company. They've integrated both companies. So on the One Grade Studio side, they're able to provide services to High Voltage's clients, and High Voltage now is able to service all of their clients before the acquisition. So it's a merging of businesses, clients, etc., with opportunities to upsell on both sides. Digital here, everything that you could think about in terms of a digital marketing and services provider. So digital strategy, coming up with a strategy for clients, doing audits of their clients' digital footprint. So Learn, Grow, Invest here only on 6 platforms. Based on your target audience, we think you should do XYZ. Digital ad placement and management, email marketing. So a lot of you are on our mailing list, for example. So they may provide support in that regard. Social media strategy, conversion rate optimization audits. That just means the rate at which you're converting leads to actually paying customers, or not necessarily always paying, but converting in whatever that means for you. So for example, even a lead signing up to a newsletter can be considered a form of conversion. It really depends on what the goal is for the client. And real-time performance dashboards would be, I guess, the reporting on the services that are there. In terms of apps, what you're seeing here, UI and UX design, web app scoping, design and development, mobile application design and development. I get the picture that this isn't necessarily a big part of their focus right now, but I may be wrong. So we'll ask about this side of the business and how much it contributes to revenues. Yeah. And then I believe this is the last slide. It says here, let me just do a quick check. Yes, this is the last slide. Brand strategy and design services. That's strategy, playbook, style guides, logo design, brand collaterals, and print design. I think that's pretty straightforward. So let's move on. So this is their company structure. So as I said, I thought I've mentioned the company that they acquired here, so that you're seeing that on the left. So they created High Voltage Digital LLC to acquire the assets of High Voltage SEO LLC, right? So if you think about it this way, One Grade Studio created a company that could then acquire the assets of a company in the US. So now they own all the assets for that company. And what you'll see when you get to their financials is that integration of the revenues from that company into the overall group of One Great Studio, right? It says here, it's important to note that High Voltage Digital LLC operates as a digital agency in the US, which then outsources its services, delivery, administrative, and operative functions to OneGS, right? So you get that, how that model works. And One Great Studio LLC operates some of the core administrative functions of One Great Studio, including the global processing of payments, right? It says here, Snappy Limited is a non-operating and currently dormant company incorporated for a proprietary digital product, which the company has not yet marketed. So that seems like a product that maybe is on the back burner for now. That could be, maybe gets an opportunity to be marketed down the line. So I doubt we'll get any insights into that product specifically right now, but this is currently the corporate structure of the company. All right. So we're going to look at the management team. Again, we're going to be meeting with Javane and Gina next week. We're going to be meeting with Javane this week, Wednesday, for our CEO series interview. So we'll be able to speak to them greater in depth. And this is the rest of the management team that you're seeing here. The prospectus mentioned them, taking the, spending time to recruit Robert Evelyn to join their team in 2019, and they would have seen the benefit of that, of him joining the team at that point. So again, that's detailed in the prospectus for you to see. All right, so the part that you've probably all been waiting for, let's dive into the offer. Let me do a quick check to see if there are any questions here. Okay, so Candice, if it's blurry for you, try to increase the resolution. We are streaming in 1080p. So if you're on your phone, just click on the gear icon. You should see the ability to change the resolution. And also, if you're on your phone, see if you can change the landscape. It should show full screen, and then maybe that will improve. But yeah, hopefully that helps, right? Okay, let's get back into this. So the offer here, these are just some details about the company, just for you to understand where they're coming from in terms of share capital. So they've authorized unlimited shares, which means if at some point in the future they want to, for example, issue more shares, they have the ability to do that. Issued shares as at the date of the prospectus is 1.3 billion shares, and the maximum to be issued in the invitation, if fully paid up, is 338 million. That's the amount they're raising. It's $1 per share. So the number of shares they would have outstanding would be 1.354 billion. So that's where things are right now. So the existing shareholders would have passed a resolution approving the following changes in the capital structure of the company. So there's a chart of the existing shares that were subdivided into 57,636 ordinary shares. And that's how they had pretty much enough shares to be able to offer to the public, essentially. So this is common before an IPO, where shares are subdivided, because when you're a private company, you don't necessarily have a large volume of shares. So usually there's some subdivision before you go to market, so that essentially there's enough shares that you can make some available to the public. Each shareholder before IPO will have essentially their same number of shares, because it's subdivided equally for all the existing shareholders at the time. And then, of course, the next part was to issue the additional 338 million shares, essentially to offer to their key partners in terms of the reserve pool and the general public, which is what gives persons the ability to buy into the IPO. All right. Next, we have here the breakdown of the number of shares that are available on offer. So there are key partners, and again, this is common for IPOs. Companies try to reward those who would have been a part of their journey to that point. So there are key partners. Let me see in the prospectus if that is defined somewhere. I'm sure it is. Yeah, definitions I'm seeing here on page 25 that says Key partners means persons that the company determines at its sole discretion as important to the business and its operations, namely existing and potential business partners, customers, suppliers, consultants, non-executive directors of the company, as well as pension funds, collective investment schemes, and discretionary portfolios managed by a broker and its affiliated companies. So whoever they decide at your discretion is a key partner to the company, has access to that pool. How it typically works, if you're a key partner, you'd know. So usually there's a list that's provided to the broker or the brokers that are facilitating the transaction. Once you can verify that you're a part of that pool, then you get access to those shares. What that typically means is that you are not having to compete for what's available to the general public. So that represents 45% of the total shares being offered. One GST members would be essentially their employees. Let me just confirm that. I'm almost sure that is yes. Employees of one great studio, and the general public would be everybody who doesn't fall into those two categories, right? So 50% of the offer is available for public subscription, and the rest are subdivided as you're seeing. Some key dates to take note of here. August 11 was the date of the prospectus release. Opening date is the 28th of August. So they've given it, more than 2 weeks, which is actually good to see in the sense that you have enough time to ventilate the offer, ask all the questions, watch all the interviews to be able to make an informed decision. So there's not necessarily any rush where we have to try and, usually in the past we've seen prospectus is open for a week or available for a week. That's typically not enough time, I believe. Closing date, assuming that it stays open for that entire time, is September 18th. Now, the company does reserve the right to close early once they have, raised the funds that they are looking for. Minimum subscription, 10,000 shares, which means 10,000 Jamaican dollars minimum, and then increments of 1 share. I thought that was interesting. I thought the minimum of 100 or 1,000 made more sense here, but prospectus says 1. Processing fees typically 172, and all these other things here you should look out for. So basis of allotment, 6 days after the closing. So if it closes on the 28th, count 6 days after, and that's when you'll see the basis of allotment. Refunds are then issued 10 days after that, and then the listing of shares will take place. The listing of shares will take place at a point after that, right? So let's move on here. So in terms of use of proceeds, this is what is stated in the prospectus in terms of how the funds will be used, which is very important to go through. So let's talk about it now. So it says here they're going to the debt reduction. Now they would have taken a loan from Barita to be able to complete the acquisition. So they're going to repay 220 million out of that debt. They have invitation and listing expenses. For those who are unaware, it does cost you money to list. It's not free. So that's about 30 million to list. And then strategic growth objectives. Now this part I'm definitely going to be asking about in terms of what exactly does this mean, because it does go into a fair amount of detail in the prospectus, speaking about existing products and developing those within clients, etc. So when they say developing new products, lines of business, etc., I'm hoping that we can get some tangible things like, for example, we're going in, let's say they're going in, trying to think of an example here. Let's say that they're going, specifically into TikTok advertising or whatever. I'm just looking for maybe clear, new products or service lines that they see opportunities for, because the fact that they need 58 million to do it implies that there's some amount of investment required, whether it be staff or maybe, software, infrastructure, etc. And then developing human capital here is 30 million. So building out their marketing and business development. Most of their business so far has been growing through, referrals, word of mouth, etc. So they're now putting dedicated capital to marketing and business development to grow in the territories for which they're already in. So this is how they're planning to use the funds. All of this, brings it to the total that is going to be raised, which is 338 million. All right, so let's look at their financials now. So what we have are high-level numbers here. So as I said, I'm going to be reading from the MD&A in a little bit. So, well, actually, based on where we're halfway through, so I'm just going to kind of read as I'm going through and just read the notes based on what is there. I think that may make sense. So if you have any questions, just be sure to let me know. So we can just take those as we go, right? All right, so let me take this question from Robert. So Robert, I have not seen any other selling agent being mentioned so far, but you can actually access the application on the Barita Boss website right now. I did double check. If you don't have an account, you need to create one. So that's something to know. But because of the amount of time until the offer opens, I suspect there will be other agents, but none has been mentioned so far, right? All right, so I'm gonna go through and find the notes while I'm reading through here. Just give me 1 second. Okay, so I'm actually gonna switch plans here, and I'm just gonna share my screen on this side and just go through it since we're halfway or trying to finish this within an hour. All right, so let's see if we can do that. I'm going to share my second screen. If you're not able to see it, definitely let me know. But the plan is that you should be able to see what is being presented. I'm waiting for it to come up. Let me try that one more time. Okay, so just give 1 second. There we go. Trying to figure out what's happening. All right, so if at any point you can't see, just let me know, and I'll try to zoom in as best as I can. So we're reading from the prospectus. So I'll just show you the page that I'm on. So I'm going to be reading through their MD&A, which has the financial highlights and their projections for the next 5 years. So we're going to go into that, which is very important. So they start here by giving an overview of the economy, what the IMF is projecting in terms of growth. I'm going to skip that for now. I think that I'd rather us focus on the industry. So let's look at that. And I'm going to scroll down to the impact for them, right? So the first thing that they say, in terms of what drives the industry, it mentions here that they expect that SEO services will be one of their major drivers of growth. Again, that would make sense for the acquisition. So this primarily involves web page rankings on search engines. We spoke about that before. So that total market that they see it stands at about 57 billion US, as reported by IBIS World, right? The market, however, is fragmented with low barriers of entry, right? So if we were to speak about a potential risk, this would be one. So though the industry has a low barrier of entry, they do mention that they focus on really the higher end clients and not necessarily, let's say a John Brown wanted to start providing the service tomorrow. A company like Barita wouldn't be looking to work with a John Brown. Barita wants to know that you have a team, you have persons who are proven in the industry, and that you can have a long-term partnership. So what they're saying is that they see the opportunity to work with those higher end clients. So the barrier of entry risk that's there wouldn't necessarily, they've mitigated that somewhat by focusing on a particular segment, right? The next one is, of course, increase internet penetration, which they see as an opportunity for growth for them, and that's stated there. So looking specifically at their target markets, the US has currently an internet penetration rate of 93%, and the Caribbean stands at 67%. So what they're saying is, of course, that they see as an opportunity for them. So the more countries, more clients have access to internet, then the more they'll need digital services. And finally here, increased digital marketing spend. I can tell you that more companies are looking to do that. So though persons are looking at, well, the pandemic is no longer there, everybody's going in back to work, companies are still looking to increase their reach digitally because of the proliferation of social media, right? So that's something that they're expecting here to continue to increase. Now, whether or not they're able to capture that wallet share really depends on their effectiveness as a company, right? So while the uncertain economic outlook for 2023 is expected to impact marketing and advertising, what they're saying here, and we have seen this, right, where customers may be reducing their spend. So let's say that customer who used to spend 2 million on marketing and advertising may choose to spend maybe 1.5 or a million. They may still have that marketing spend, which could impact them. They're saying that it is expected that over the medium to long term, structural factors will remain, which positively skew the trajectory of the industry. Short version mean they still expect the industry to grow, right? And then here it speaks about their risk. I'm really hoping that you're able to see this, by the way. If you can't read it, let me know. I can try to go full screen. So maybe it's a little bit easier to read. Let me do that. So that's a little bit better. So it says here that there are some aspects of risk within the industries that they operate that they're aware of and have taken steps to address. So firstly, the industry that they operate in is highly competitive with low barriers of entry. We spoke about that before. And then it speaks about the segment that they target. So they're looking for the client that's looking for a holistic digital strategy. That's their target client, right? And then it's speaking to know that the acquisition. So it says their objective with acquiring. Let me see if I can zoom in there. Well, it's a little bit harder to read here, so let me go one step back out. So it says our objective with acquiring particular assets of a company was to deepen the technical competence referred to by bringing additional skill sets in-house and gaining access to new markets, right? And we'll talk about that a little later. Let me see if I can scroll through here. It's easier to do this and then find the page I'm looking for. So this is the financial overview. We're gonna get to this now. All right, so this is revenues for the past 5 years. So we're seeing from 2018 to 2022. Now, of course, you would expect, so whereas for most companies or industries, 2020 might have been a bad year, for them it was a good year. They almost doubled revenues for that year. And then in 2021, they saw, further growth. And then 2021 further growth, 2022 even more so, right? So they've been growing at, I think the rate they mentioned is about 80% in terms of their compound annual growth rate. So that's what you're seeing here. Of course, with a business like this, a great concern would be operating expenses. So that naturally will grow as revenues grow. They are a service-based business, so it's specialists they're working with. So of course that would fetch a higher salary. And then of course, because they're in the digital space, they may have infrastructure costs that would impact that as well. And in terms of profit before tax, a line that would be interesting for a junior market company, because when they list the first 5 years, they'll have a reduction in terms of income taxes that they'll need to pay. So watching the profit before tax is going to be an indication as to what profits they'll be able to focus or well take advantage of for the first few years, right? Their balance sheet has grown, of course, from 2018 till now. So 9 million in total assets to at the end of 2022, 478 million. So that's significant growth in terms of their balance sheet. Liabilities naturally would have grown as well. This is largely going to be the debt that they would have taken on to do the acquisition. And that's where you're seeing that increase between 2021 and 2022. And of course, that's going to be paid down significantly after a successful raise, right? Their cash balance has been growing significantly as well, which is good to see, because again, service-based business, you want to be able to pay the resources that you're using to deliver the services, and so it's good to have cash to be able to ensure that there is no disruptions in terms of providing that service to your clients, right? Cash flow statement, and they've done a great job just summarizing these sections here for you to see. So of course, this large outflow that you're seeing in terms of investment activities, without even looking at it, would be, of course, related to the acquisition, I'm sure. And then, of course, cash inflows from financing. Of course, if you receive, capital funding or taking any form of debt, that would impact that number. And then these are some of the ratios that they're showing here. Again, you want to, I guess, kind of see how these progress post-listing. So these are things that, when there's a quarterly review, I was going to say when there's an earnings call, but we don't know whether or not we'll be having that with them or not. But this is something that you want to watch as things progress for the company, right? So let's look at High Voltage, which is a company that they acquired. So they registered High Voltage Digital LLC to be able to acquire the assets of High Voltage SEO. All right. So these are their numbers. So the acquisition took place in September of 2022. So what they're showing you here are the financials for the company from that date and including the first quarter of this year. Right. So these figures now would be in USD. Yeah, so that's what you're seeing here. So just for some context, 505,000 US would be maybe about 60 million, I think, if I'm not wrong. Let me do some quick math there, right? So 505 million at an exchange rate of 155 is about 78 million, right? That's what they would have done from October to December, and then from January to March they would have done a similar number. I believe it's $50,000 more, so I believe it was closer to 90 million, I believe, right? Direct costs, gross profit, etc. So this would be the company that they acquired. They're showing you their financials separated from the company as a whole. So this, of course, would roll into one great studio, right? Showing its assets here, assets of 2.6 million as at first quarter this year, liabilities of 112,000. That's actually pretty good, and shareholders' equity of 2.5 million US, and an accumulated surplus of 68,000, and then showing the cash flows in and out of the company, and so on, right? So let's talk about the numbers here in terms of their growth. So what I'm going to do is focus on the most recent year, which is 2022. So what they've done is broken down 2018 to 2021, and then give you context on 2022. So I've highlighted some things here. That's what we're going to focus on in terms of going through the rest of the review, right? So for 2022, it says going forward, their focus will be scaling their SEO, websites, and apps, digital strategy, and marketing business lines, as I expect much of the growth in the near term to be derived from those lines, which is why, again, I'm asking based on what the prospectus says in terms of new business lines, etc. I'm just interested what additional lines of business that they are expecting that wasn't already mentioned here. Now, if it could be within the same category, and we just don't know what it is. So that's definitely a question that I have. Next, it says their website and application development business lines focus on building web and mobile apps for their clients, while their SEO, digital strategy, and marketing business lines help to drive traffic to those assets and optimize business outcomes. So it says the acquisition also served to further diversify their revenue sources, which is definitely a plus, both geographically and across customer segments, right? So both in the locations that their clients are. So what I actually did is I thought this would be good to check out the website for the company that they would have, acquired, which is High Voltage. So, it's something that shows the clients that they have. So they have the locations that they operate in here. They have the services that they provide, some case studies down the bottom, etc. So if you want to kind of investigate the company, understand, what they kind of did before the acquisition and the value that they'd add to one great studio, I would recommend that you check that out. So fairly easy to go through, right? So just add something that I thought would make sense for you. It says here that they served clients from Jamaica, US, Australia, Germany, Canada, Israel, Korea, etc. Right? Then it says here, which I definitely wanted to double click on here. Thought this was interesting to see. So right here, it mentions as at December 2022, they served 117 active clients, with their top 3 clients accounting for approximately 30% of their revenue. Right. So of course that does have some sort of concentration risk in terms of clients, but it says here that Barita Investments Limited accounted for 16 of that 30%. The client concentration risk is expected to continue to decline, so which means they're expecting not to be as concentrated moving forward in terms of that risk. And then lastly, approximately 60% of all their clients are on retainer contracts, which means you can book, I was going to say you can book 60% of the revenue, but you necessarily can't, because it didn't say 60% of their revenues are from clients on retainer. It says 60% of the clients. So you don't know how much the 60%, adds up to in terms of revenue, right? So I'll just say that based on how I'm reading this here, right? But it does mean that there is some amount of consistency in revenues that are expected to come in, right? And it mentioned previously, of course, that the average spend per customer would have been increasing over time. So it says here for 2022, they experienced significant year-over-year growth in gross profit. That's to the tune of 68.72%, primarily due to the asset acquisition, resulting in a gross profit of 127 million at the end of the financial year. So let me see if I didn't miss any graph before. Okay, so let me go through the graph. So this would be their revenue and year-over-year growth since 2018. So from 21 million in revenues to 240 million in 5 years, definitely significant, definitely a great accomplishment, and one that you can expect to continue at least over that $200 million mark based on now the combination of both companies, because the high voltage business generating maybe about 80 million. Their business in 2021 was generating 128 million. So combined, you're doing at least 200 million in revenues per year, is what this is saying. And then of course, the growth rate would have been, significant from 2019 to 2020. But then of course, it's not necessarily expected that you would hit these high levels every year. But of course, it would be interesting to see definitely what the next year looks like for them based on their dedicated push for growing the business, right? So I'm gonna skip gross profit and focus on operating profit here. So I highlighted something here that mentions, was this something I wanted to speak about? Let me see here. No, I think I'm gonna skip that part. I'm trying to figure out what I would have highlighted this part for. Oh, so this was speaking about profitability here, saying that when they doubled their workforce in 2019, they would have realized a loss for that year. So that's what you're seeing on the graph for one of the years. I won't go to that now. It's in the prospectus. Please check it out. Okay, so this is net profit and net profit margin. So yes, this is what I was referring to before. So this is their profitability over the last 5 years. So what I was referring to was this year where they realized a loss. That was because they would have been preparing their team in preparation for the growth that they would have had the following year. That's what it said in the prospectus. So their net profit has been growing over the last 3 years. And again, it's a type of business where you're not expecting that it's not the type of business where you're expected to have any significant reversal in terms of what they've been able to accomplish, especially based on the number of clients, the type of spend per client, etc., right? And how the business has been going for the past couple of years, right? Okay, I want to focus next on the projections. So let me go there. Okay, before I do that, I want to speak about their asset composition. I think I highlighted this one here. So the increase in intangible assets that you saw on their balance sheet includes the high voltage website, domain name, branding assets, social media pages, license, proprietary client, goodwill. I'm very interested to see what the proprietary content is. And then it says both companies are similar in terms of being asset light. Therefore, the acquisition price was largely accounted for as goodwill, right? In addition to that intangible asset growth, cash and short-term investments was the second largest driver of growth in the company's asset base. I would have seen that discussed previously. All right, so I'm seeing here if there's anything that I want to look at their projections. So I'm going to skip to that now. All right, is this, let me see here. But quite a bit of detail, I would say, guys, please be sure to go through. I would sit down and read through the entire MD&A. It definitely makes for a good read. It definitely would take me more than an hour to read through all of it, but it's important to go through it, right? So it's always interesting to me when companies do projections because, of course, it's setting an expectation of what's to come. Now, it's going to be important to understand what they're accounting for, what their assumptions are for those projections. So we're going to look at the projections and essentially read their commentary on it, because that is going to be what you're investing in, right? Not the past in terms of what they've done, but their projection for potential growth, right? So they're saying here that they're expecting to do 538 million in revenues for 2023. So we are at 8 months into the year. And so it would be important to, I believe, once they list, the first report you'll see is Q3. So the Q3 will tell you whether or not they're on track to get to their projections for the year, right? Of course, as revenues increase, then direct costs will increase. Their gross profit is projected to be 290 million for 2023. Other income just 6 million. Their administrative expense would definitely increase. All companies that list see an increase in admin and general expenses, because there will be, of course, remember they're projecting 30 million alone from the IPO costs, right? So there are other costs that they'll need to start doing, monthly costs from the JSC side, etc. So those costs are going to go up, right? Operating profit, they're projecting to be 173 million. Finance costs to be 28 million, and then profit before taxes 136 million. It's going to be important because they will have the opportunity to have the tax break. So that's where you're seeing the taxation for the future years being so small, because I'm assuming some of those costs would be related to the US entity and not Jamaica. And then net profit projected for the year is 119 million, right? So I'm not going to focus on the remaining years. I don't think projecting so far out is something that I'm necessarily interested in, especially for a review. It would be good to see, of course. I'm happy that this is here. It would be good to see, of course, how they go through the years. Now, of course, if they're able to do and meet their targets for 2023, 24, 25, etc., then it sets them up to definitely accomplish their goal of $1 billion in revenue in 5 years. So, I mean, we've certainly seen the growth rate they've had over the past few years. So it's really, putting everything together. So, of course, all of this, going out to the 5 years is really going to be based on the foundation laid for the next 2, right? So that's what I'll say here. So my focus personally, whenever I read a prospectus, I'm looking at where they are in the year. So you can look at the Q1 numbers that they've shared, deduct that from their 2023 forecast and see what number they would need to cover for the 9 months. And then for the rest of the years is really just based on how they finish this current year as to whether or not they have the opportunity to get there. Because all of these, projections are just that, right? It's a projection based on your assumption of what you're able to do in the market. And I'm almost certain that they're not going to say to us, we're planning to do XYZ to be able to get X amount of revenues, because that would be their strategy that wouldn't necessarily be able to be shared publicly. But once they list, you'll be able to see fairly quickly, within maybe a month or 2, where they are in terms of the financial year. I'm not sure. I'll be asking if they're planning to release, I think their Q3 report is what we could see, or I don't know if they're planning to do Q2, because one thing I've heard Javane say is that for about 3 years now, they've been practicing reporting quarterly, right? In preparation for listing, which means that they would have the opportunity to show us what the Q2 numbers look like, to see how they compare to their targets for 2023, right? All right, so let's talk about everything that we just looked at, right? So it says projections for revenue for 2023, which represents a growth rate of 125% year over year. They intend to grow their revenues to 1.3 billion in 2027. This represents a growth rate of 20.24% between this year and 2027, right? So they're going for conservative growth based on even how they've done for the last few years, right? That's what they're saying here. With their recent incorporation, they're expecting significant increases in revenues generated from their SEO business line. Their total revenue was 114 million, up from what they did in Q1 2022. That represents an increase of 159%, right? So out of that 535, they're at 114 already, right? Which means they needed to do 400 million in essentially the 9 months, right? Let me see. So in annualizing the first quarter's SEO performance, revenues would amount to approximately 336 million from that segment alone. So what they're saying is here essentially, from that 535 million, they're expecting 336 from the SEO business alone, right? Just by annualizing what they did in the first quarter, right? So that gives you the context there. Upon full integration of the SEO business line with their operating ecosystem, they believe that will enable them to drive growth in their top line, right? So that kind of answers the question as to what a projection is based on. So they also believe that their other core business lines will be able to grow above and beyond the impact of cross-selling with their newly acquired clients. So as we mentioned before, they would have acquired clients from the SEO business that they are now able to offer their digital services, their branding services, their web design services, etc. One such growth factor is the increased visibility from this IPO and from being a listed company. All right, so let me see here. I'm gonna go through that. Okay, so they're saying here that this will aid in them achieving their long-term objective a long-term objective of enhancing their presence both locally and regionally, and that provides them with a larger addressable market and added benefit of more diversified revenue streams. All right. I want to see what they're estimating in terms of operating expenses. So they're saying as the company grows, they're expecting that their operating expenses will grow at a slower rate than revenue. This is a continuation of the operating expense ratio, improving from 32% to 27%. Against that backdrop, they're projecting to lower their operating expense ratio. That takes into consideration the additional spend to build out their human capital and increase their sales effort. Let me see here. And they're saying here they've already started to experience that decline in terms of what you're seeing in Q1. Of course, it would be good to see that annualized, of course. So we're gonna want to see how that goes for the year, right? As they continue to execute on their integration plan, the operational overlaps will yield cost containment as administrative and back office operations will be merged. So they're essentially going to be, consolidating operations to be able to realize, cost savings from that, right? And then profitability. This is what they're talking about here. So the debt that was taken to do the acquisition will be significantly reduced. So their financing costs will be reduced. So their profit before taxes they'll be able to capture more of that in terms of going to net profit, right? All right, so let me see here. So the average net profit margin for the period is projected at 26%, and so they're looking for revenue growth based on what they've outlined above, cost containment, which is going to help them keep more of their revenues, significant reduction of debt, that of course is a part of their use of proceeds, and then of course the tax benefits. So all of these things coming together will actually serve to benefit them in terms of how the company is going to be able to reflect their profitability over the next few years. All right, and that is the basis of their projections. All right, so I'm really hoping that was helpful. I'm going to switch back to slides now to kind of talk about how you can apply for the offer, etc. So it is a fair amount of detail, I'm not going to lie to you. Hold on, let me see if there's anything else that I missed out. Went through the projections. This page that you're seeing here is speaking about loans they would have had to the date of the prospectus. So car loans and a loan that was taken to obtain server infrastructure, and then the loan from Barita for 270 million. So that's what they'll be paying back down from the IPO. So let's look at their dividend policy. And by the way, I'll be adding chapters to the video. So just in case you're watching this part way and want to be able to see what you've missed, we're going to add chapters to the video as soon as we can. Hopefully by Wednesday that will be there, right? Let's talk about their dividend policy here, which states that if they're admitted to the junior market, they're intending to pursue a liberal dividend policy that projects an annual dividend of up to 30%. So let me show you how you can calculate that potential dividend, right? So if they're saying up to 30% of net profits, you want to go back to those projections here and look what their projection is for net profit for 2023. That was 119 million. And if they were able to realize that 119 million net profit, so you multiply that by 30%, that would be a $35 million dividend. You divide that by the number of shares they have outstanding, and you'd look at the potential dividend that you would get from that in terms of, let me see if I can just do a quick calculation here. That would be about, I think, a 2-cent dividend per share, if I'm not mistaken. Right, so that's just my kind of rough math. Somebody, of course, can correct me if they did another calculation. right? So it says here for their financial year for 2021, they paid a dividend of 484 Jamaican dollars per share. Of course, they had fewer shares at the time, so the the dividend per share, of course, could have been higher at that point. So it represented a 20% of net profits at the time. And then for 2022, they did a dividend of $385 per share, which represented up to 30% net profits, right? So they would have made more money that year, but I suspect maybe they had maybe even more shareholders. So that's why the amount might have decreased there, but they paid more out of their net profits for that time, right? In terms of how to apply, again, I would have mentioned that baritaboss.com is the site that is provided in the prospectus for application. So if you go to baritaboss.com, you have the opportunity to apply. If you don't have an account, you can sign up. Now, you don't have to have an account with Barita to apply. You just need to have a valid JCSD number. So that's what you need to sign up. I'm not going to go into that in depth now. I think you can wait for the live Q&A if you have any questions about the application process or etc. If you have questions in advance, share them, with me, and I'll try to pass them on to the team. But I mean, if it's your very first IPO, usually using the platform is fairly straightforward. The next slide speaks to the sign up process. So it's mentioned here the steps that you need to do. So it walks you through very, very clearly. Go to the site, click on buy IPOs, click create an account. So it breaks it down for you, right? So it takes out the guesswork out of what you need to do. And then once you've signed up, it speaks to the options for payment. So managers check, a transfer of funds, all of those things here, again, detailed in the prospectus for you to go through. The thing to remember, minimum number of shares is 10,000 to apply with increments of 1. And then once you've signed up, so once you go on the platform, do the submission, then at some point you'll need to know, I believe, attach payment verification, and then that would confirm your application for the IPO, right? All right, so I believe that is it for my review, guys. I know this was a lot of information that I tried to squeeze into your brains over the last hour, but I'll talk about now just a little bit about what I see for the company, the good, and just I guess some of my concerns in general that I thought about as I was going through this prospectus, right? So I tried to read through as much of it as I could. I usually read everything up to like the auditor's report. So I read the whole prospectus essentially. I love the story of the company in terms of how they've been able to bring the company from 2 persons up to the team they have today. It's a company that you don't hear about a lot, but you've been seeing their work. So I know, for example, persons have been talking about, for example, how great Barita's social media has been, and Barita is always hitting the mark in terms of their social media. That is that's partly due to the work that they're doing with Rank One Great Studio. We saw where even the Barita Boss application was built by them. So those are all good things, right? They also had the acquisition, which I think was a great accomplishment for a private company to do an acquisition, right? That was a big deal, I think. And the fact that they were able to do that acquisition, integrate them so quickly, and the process seems to be still ongoing, but for the most part they've seemed to be able to expand and grow the business through that partnership. I've been doing some research into the high voltage company, looking at the website, going through that just to understand, I guess, the potential impact and synergies that are there. I'd recommend that you do the same as well. Their income is diversified, which is definitely good, based on the different areas that we went through. All these things are positive. And finally, as well, their diverse customer demographics, Caribbean, North America, Europe, etc., What I am interested to see now in terms of all of these countries, what is like the penetration within each country, right? What's the revenue per country? It mentions for the clients that they have, the 117 clients and the average spend per client. Naturally, that means some clients spend more, some clients spend less. I'd love to understand, for example, what's the revenue per country. Again, that's not information we're probably likely to get, but it would help me to understand where they're getting majority of their revenues from. Because listing all these countries doesn't necessarily mean they have a large clients or a large number of clients in these countries. Now, I'm assuming that a lot of that is coming from high voltage in terms of maybe their existing client base. Being an SEO company, they could be servicing clients all over the world. So they get to benefit from that, charging in a different currency, etc., does present opportunity, but it also presents risk. So I'll talk about some of the risks that were mentioned for them and that what I see as well. So based on the type of business that they operate, there is a risk in terms of clients moving on, right? So it's called switching risk. So it's stated in the prospectus under their risk section. So they have a risk of losing clients. This is a risk that every business faces. So of course, there's nothing that you can do to control that risk. It's an inherent risk of doing business. Well, I guess one way to reduce that risk is contracts and retainers. They did mention 60% of their clients are on retainer, which is good. It also mentions in the prospectus currency risk, which means depending on the volatility of the US dollar, that could impact their earnings somewhat, since majority of their earnings would be in US dollars. Competition risk was mentioned in terms of the low barrier of entry in the industry. But again, they would have addressed that based on just the type of clients that they go after. But even in that segment, I'm sure there's competition, not necessarily inside Jamaica, but maybe outside Jamaica. And then, of course, those are the key ones in terms of threats that I saw for them. In terms of opportunities, of course, I see that they do have added advantage. So when we met with RPL for their earnings call, one of the things Andrew Williams always mentions, he's mentioned it a couple of earnings calls, that the listing of RPL has done a great thing for their business, right? They're more visible. Deals are easier to organize. Trust is built a lot faster with partners, with clients, etc. That's an excellent opportunity for them to grow their business. An IPO not just gives visibility to a company in Jamaica, even though they are doing the IPO in Jamaica, it provides an opportunity for them to kind of say, okay, we're a listed company. So if you reach out to a client and say we're listed on the Jamaica Stock Exchange, if the client doesn't know you, you're able to build trust faster, because they're saying, well, if you're a publicly listed company, then I know I can find you, right? So that makes it easier to be able to build trust, to win new clients. That's an opportunity for them. Being a digital company means they do have the opportunity to expand and diversify their services. They did kind of allude to that a little bit. As for me, though, it wasn't clear from reading the prospectus what those opportunities are, since they did mention that a bulk of their business, 336 million for 2023, is expected from the SEO business, right? So in terms of new business, what it will generate, would love to know what some of those things are. In terms of weaknesses, I would say weakness being, well, I don't know if I'd call it a weakness, but being a service-based business, I would say makes it interesting in terms of how they plan to manage costs, right? Because let's say that things go really well, you're able to scale in terms of clients. What does that mean for their costs? Now, the expectation is based on the fact that they're running such a high quality service business that they'll be able to make it back in terms of their revenues, but it means increased costs, right? In terms of how those costs are managed, they seem to have the right processes in place. They've been, managing costs as they've been growing. So that's something that I'd watch for. I'm always watching for persons on this channel know me that I'm watching for how costs. I'm always looking at cost management for companies because personally, as an entrepreneur, that's what I'm looking for. And so that's something to watch for. So again, I'm looking to see if we can see that if we can get one of those financials, whether Q2, Q3, to kind of see how things are shaping up towards that forecast of 535 million, that would be good. That's something that we can ask, Javane on Wednesday. As I said, I'm not sure how much we'll be able to hear, but I would want to know if they plan to. Now, they don't have to, I believe, but it would be good to see what Q2 looks like, what Q3 looks like before we get to Q4 being due. And so, yeah, that's it. So I'm going to check your comments now and your questions to see if there's any that I can answer. Thank you guys for being here. If you have not yet liked the video, please take a minute to like the video. If you're brand new to the channel, be sure to subscribe. This is going to be one of 3 videos that we're doing on One Great Studio or related to One Great Studio. So this prospectus review is video 1. We have an interview with the CEO on Wednesday, or regular CEO series. Then we have a live Q&A next week, Wednesday, with the founders of One Great Studio and the lead broker to kind of answer all remaining questions, right? Over the next week, I'm sure you'll see them doing interviews in multiple sources, some of which you already know. So by that time, if there are any lingering questions, or of course, if I still have questions, we'll ask them and we see just how much you can connect with them and get to understand them before you make a decision relating to this company. Right? So I'm going through the questions to see if there is anything that... Okay, so Harold is saying I should look out for it to be announced that it will be available on Moneyline. I would not be surprised, right? Because I actually reached out to JMMB today to ask them if it's going to be available, because I told them that I was doing a prospectus review and I figured that somebody would be asking. Omar, their year end is December. Their Q1 for 2023 was shared in the prospectus. So since Q1 was January to March, I figured their year end is December, right? Anthony is saying, just another virtual company with no tangible assets. We need companies that contributes to Jamaica's GDP. Well, Anthony, I don't understand what you're saying here, right? Because one, think about the makeup of the exchange, right? We have not even a handful properly of tech and digital companies. So we actually need more companies to give some diversity to the market itself. I have a tech background, so I have a deeper understanding of tech companies than I do other companies. So I definitely appreciate this type of business in terms of my ability to understand it. All right. Harold is saying that he gets what Anthony is saying, but the fact that they're employing over 50 people, exactly, right? So they're paying salaries each month, right? Salaries that persons use to buy houses, buy cars, pay light bill, buy food. So they are contributing to the country, Anthony. And Anthony is further saying he doesn't think Harold understands. What he's saying is company coming to market too many service. So Anthony, I don't understand what you're saying, right? It can't be too many service-based business because there are over 100 companies listed on the exchange. Name 10 service businesses that are listed, right? So I think you should look at it that way. Now, recently, you could say maybe the last year or so, the type of businesses you're seeing are different, but I think that's actually a good thing because, again, it brings diversity to the market. Anthony, I'm reading your later comments. Very interesting, right? I don't have any response to your comment, right? I think Orville summed it up right. It's a new company, so you don't know how every potential investor will receive it. And that, I think, is really what it comes down to now. The good thing for this company that I see bodes well for them, they're a digital first company. So what I was expecting is what I'm seeing: a lot of marketing, a lot of advertising, great representation of the company, great storytelling. These aren't bad things, right? Because they have the ability to share with you the fullness of what they have to offer in a better way than maybe some of the other companies that would see. I look at that as a good thing, right? Not a bad thing. All right. All right. So 70% of the Jamaican economy is service-based companies. I don't know of that percentage, but if that's the case, I mean, if you think about it, right? It's easy for me, Jermaine McDonald, the individual, to start a service-based business. It's low cost. I started my first company selling computers. So I can provide a service to someone that's a lot easier for me than starting a product-based business that has now a higher cost of starting up, etc. Right? All right. Anthony saying an IPO being oversubscribed is nothing. Well, I mean, that to me is just a function of how much is being raised. I don't necessarily take. I don't think it's a great issue in terms of how much it's oversubscribed or anything like that. That simply is just a signal of demand, right? That gives you an idea of the demand for the company, which is a signal, at least in the short term, of how the company may trade. So it's still good to understand that. But with just 160 million available to the public, that's not hard to be fully allocated, I would say. And I mean, in terms of, so what I like to say, guys, you want to evaluate the offer based on its own merit. Now, I understand that you may have an opportunity to either, I get the market kind of, groups all the companies together, says, this, that about what they're seeing, or what they think they're seeing overall. What I say is that evaluate each company on its own, right? Don't group this IPO with all the past IPOs. Look at what the company is offering, look at their type of business, assess them based on the type of business, and make your assessment based off that, right? Kimar is asking, what do they mean about how many share one individual can purchase? Right. So Kimar, you have the minimum subscription for the IPO is 10,000 units. That's 10,000 Jamaican dollars, and you can order in one share increments, right? So 1,000 and 10,001, 10,002, etc. Right? Shelly, good question. Shelly, I was looking for you, right? I didn't see you. I was wondering if you're going to watch the replay. So in terms of plans for expansion, as I said, for me, I might have missed it, but there's a section that speaks about strategic growth initiatives. It says developing new products, lines of business, and funding regional expansion and international growth, right? So what they did mention in terms of their banking on the SEO side of the business, which is part of the company that they would have acquired, the core business for the company that they acquired, is going to account for a great deal of their revenues, right? They have a lot in terms of their core business that they can build on. And what they've stated as an opportunity for them is to be able to cross-sell services on both sides, right? So their clients that they would have had on the 1GS side, that SEO services can be positioned to, and their clients on the high voltage side that they can position digital marketing services to. So yeah, so that's their plan. But the strategic growth initiatives specifically, that is definitely a question we'll be asking Javane and the One Great Studio team in terms of what specifically are they banking on. But just look at what their core business is, what high voltage does in terms of that combined offering, and just imagine them focusing on growth of those businesses, right? Both in maybe services they're offering each client and entering new markets, right? Romario, no, there was no mention of incorporating AI. And I don't necessarily, so there was, it's something that we can ask, but I'm thinking of one of the things I heard Javane say is that they're a digital first company, and anything that aids in their ability to effectively serve their clients, they're going to investigate and see how best they can incorporate those tools or services. That's what I've heard him say. No, in terms of any specific or dedicated approach to incorporating AI, I haven't seen any in my reading of the prospectus. That is definitely a question that we can ask the CEO when we meet with him on Wednesday. All right. So hopefully that helps. Guys, I think I'm going to wrap up the video here unless there are any lingering questions. And by the way, shout out to anyone from the One Great Studio team that is in the chat watching the video now. If feel free to make yourselves known. I'm assuming that there are members of the team in the chat watching the review now. Just feel free to raise a hand just in case we can ask you any questions. All right. Anthony is saying that he recommends reading a book called Wealth of Nations, that it will enlighten you and other participants. Thank you, later. Anthony, if you're in the Telegram group, share a link to that book. All right. Not share a link to the book, but if you have it on Amazon or anything like that, feel free to share it. Shelly is asking what's unique. So Shelly, if you got here late, we went through it. We spent the first 20 minutes of the video going through their service, their offerings, etc. So it's a digital agency. So website services, social media services, marketing services is what they provide. If you've been seeing, for example, Barita's social media, they do a fair amount of that work. I believe they showed samples of their work in the prospectus. Let me actually go to that. I'm going to be wrapping up in 2 minutes. I want to close this off at 90 minutes max. Let me see if I can find that for Shelly-Ann, because Shelly-Ann is a regular. So I have to ensure that Shelly-Ann is happy, or she leaves some messages for me in the comments, right? So I'm adding to the stream now. So this is showing, so they built this website. So this is their web services, right? So they also built for Canopy Insurance. Then they mentioned their SEO services. We went through that. Digital services, so that's digital strategy, audits, ad placement. And what I did, Shelly-Ann, was describe the services as best as I could. So there was that as well. They mentioned Best Dress as one of their clients. I Protect Jamaica as one of their clients. Then they develop apps as well. So there are web apps that you can build for companies, etc. And yeah, so hopefully that helps. Let me see what else is there. Oh, okay. Well, you're asking what would, I just saw a message a while ago that I've reached some maximum something. That's strange. What did I reach maximum of? Well, I'm going to wrap up in a minute anyway. So it says here, okay. I see what you're saying. Well, I mean, so what I will say to that question, fair question, right? What I will say, there is no guarantee what businesses will be around in 30 years. And I say that with the understanding that we thought certain businesses would be around forever. Then a pandemic came and that changed everything, right? So I would say that when I think about businesses being around in 30 years, I don't look that far anymore. Now, do they have the type of business that could be around in 30 years? There's no way to know, because we don't know what technology will be. We don't know what customers will be looking for. So I think you should think about it a little bit shorter, because we thought, and I won't say this on the stream, but we thought certain companies were untouchables in the market, and we're seeing that is showing different. Shelly, how did I know that you'd come with that? Shelly is saying Trans Jamaica will be around. Listen to me. You can't mention Trans Jamaica. I'm very biased, so I'll just leave that. Yeah. So let me close that thought. I'm just saying that it's important to just understand that you have to kind of make it a little bit shorter. You don't have to ask if the company is going to be around for 30 years, because you have the ability to monitor your investment, change your investment decision if it comes to it. So you have the opportunity to kind of direct how things are done with your investments, right? Because the truth is, to think that far ahead with a digital company, with any company, I think is just a little bit too far, because we don't know where things will be in 30. For 30 years, we may not even be on planet Earth, right? So we don't know. We can't think that far ahead, I think, reasonably. Krishna, I see that question, and it is definitely one that they mentioned as a risk in terms of their prospectus. So yeah, I agree with that question. I'm going to ask it on Wednesday. Just be sure to join us Wednesday at 7 for that interview. All right, guys. So I want to thank you so much for being here. Over 400 persons joined this review and checked it out for at least a couple of minutes. So I want to thank you all for stopping by. Thank you in advance to the One Great Studio team who will join us and share their story and answer our questions. Thank you to everybody who has watched this video. Be sure to like the video, guys. Please like the video, share this prospectus review with your fellow investors, and help us to grow our community. Join us on Telegram. There's a link in the description to join our Telegram group. Be sure to check us out there. Thank you so much for watching. I'll see you guys in the very next video. Thank you so much.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.